All right, good. It's been nice to me, and it's starting now. So, well, everybody, welcome. We weren't able to see each other last week because it was President's Day on Monday. So hopefully you got the recording and kind of know what you need to do there. But let me screen share real quick, and we'll get rolling. Okay. All right. So what we're going to be going over today in class, we're going to be talking about insurance and risk management. If you look on the calendar, what this is under, it's actually under Module 9 and Module 10. Or actually, sorry, not Module 9, Module 11, Module 12. Okay, so that's what you'll kind of be looking at there to get done. Then we have one more class next Monday, and then you have Module 13, 14, 15. And really, that looks like a lot, but there's only like one in Module 15 and a couple each in the other ones. And then after that, it's like, I mean, if we put it there, the end of the block is right here on the 18th. And man, we'll be in block 4 before you know it, okay? So you got a good week to catch things up if you are behind. So no worries there. Okay, let's get back to the Nearpod real quick. So just so you know, remember this is going to be, the session is going to be recorded for learning purposes. Also, virtual class norms, just, make sure you're being respectful, all that kind of fun stuff. Okay, so let's talk about risk management, okay? And risk management actually leads into what we call insurance, which I'm sure you probably heard of insurance and all those crazy insurance companies out there and all the different stuff you can buy with insurance, right? But basically what risk management is, it says in exchange for a relatively small payment, which is called the premium, you're protected against a chance of big financial setback or large loss, okay? So for example, if your house were to burn down, okay, you may have a lot of equity or money that's into it, even though the bank may own it. You may have like $100,000 of equity in it, right? You lose that if you don't have it insured, okay? So there's things like that you got to really think about when you're kind of going through things, okay? So what we're going to do, we're going to watch this video real quick, and we're going to listen about different risk management and the reasons. All right. So this is what I want you to think about. Said an interesting thing. She said, if you were to go through life without having any accidents, how how likely is that that you're not going to ever get sick, that you're not ever going to get in a car accident, that you're not ever going to, heaven forbid, you lose a loved one, a spouse, somebody like that. What's the likelihood of that? I think it's about zero. Okay. So, especially we're going to look at teens real quick. So, because that's your age. Um, let's do a little fill in the blank here. Okay. So it says the number of insurance claims for blank accidents involving teens is, so what kind of accidents? Auto, very good, okay. Of auto accidents involving teens is blank higher than those for what? Okay, we're going to say 100%. Okay, let's say 100% higher than those of adults, right? Okay. Blank crash rates. So we're going to do teen crash rates drop by 40% 6 months after they get their license. Okay. So that's why actually, so one of the things I do, I do teach driver's ed on the side. One of the things they have what's called GDL laws, graduated driver license laws. And that's why they actually say that you can only drive with immediate family or yourself the first 6 months after you get your license because of this statistic right here. But it just shows how often you're going to have risk. Like when I was a teenager, I got in an accident with a vehicle, right? And it was my fault. Okay. And it was actually the only automobile accident that I've been in that has been my fault. But it's because I was young, right? And I was inexperienced. So, okay. All right. Very good. Okay. So let's talk about this. Could you afford to pay the damages you caused in a car wreck? Okay. And let me just tell you, so I had an older Jeep. It was a 1984 CJ7. They were awesome. And I backed up, and the accident was I just backed up and I hit my friend's, I think it was like a Geo Tracker. Okay. And it cost $2,400 to fix his vehicle. That wasn't to fix mine, that was to fix his. And that was 20 about 20 years ago. And things are a lot more expensive now. Okay. So somebody with the help of insurance, yes. If you had insurance, you would be all right. Maybe with insurance. Yeah. So basically that was called liability. And I was liable for what happened. And I didn't have to pay because I paid my insurance premiums, or my parents were at the time. I didn't have to do it. I didn't have to pay, and I could actually pay for what my cost was. Only with insurance, no, because I didn't even have a job. Okay, not right now, but I'm about to get rich. Okay, let's hope so. Okay, so yes, there's some way I would not have been able to afford that at my age, right? To fix his car, and then it cost another probably $1,000 to fix mine. And it was a little tiny accident, and it cost $3,500. That was a lot of money to me back then, okay? And so it would be very hard. What module are we doing? I'm not exactly, well, this week's modules is module 1011, I believe. So. Okay, so there's different types of insurances, okay? There's health insurance that covers if you get sick. There is life insurance, okay? So if you were to pass away, So I'm going to take myself, for example. If I were to pass away, I have life insurance that would cover um, costs of like a funeral, as well as probably the next 5+ years for my wife to be able to take care of the kids, you know, be able to pay the house payment, pay the bills, that kind of stuff, and for her not to have to work. So the life insurance, homeowners or renters insurance, this protects your property as well as your home, okay? And it protects it against all kinds of things. Disability insurance. So if I were to become somehow disabled, there's disability insurance that would cover me in regards to paying a monthly allowance so we could kind of take care of as much as we could. And then we already talked a little bit about automobile insurance. Okay. Okay. Insurance, it's to protect against large scale financial loss, which you kind of talked about. Insurance premiums, this is paid either on a monthly, quarterly, semi-annually, or annually basis. And what that is it's the money you pay to the insurance company to transfer the risk. Deductible, okay? So we already talked about, so that situation that I was talking about before when I backed into my friend's vehicle. When I hit his vehicle, not him personally, but his vehicle, when I hit his vehicle, that is covered what's called by liability insurance, which we'll talk about in a second. So I did not have to pay anything out. But to fix my vehicle, because it was my fault, I had to pay what's called the deductible. I had to pay, I don't remember how much it was. They just kind of took it off the bill, but I had to pay so much money to fix my vehicle. Okay. Auto insurance. Okay. Auto insurance, we already talked about liability coverage. That was to cover anybody's, what you're liable for. So if I were to go and I were to hit another vehicle, it would pay for the payments up to a certain amount of what damage I did. Now, if some people do not have enough liability coverage, then you have your uninsured or underinsured motorist coverage that takes in a coverage. You also have your medical payments. Those are payments that are paid out if you were to injure somebody, right? And then also collision, which is if I were to hit somebody else or damage my vehicle, that's where I'd have to pay the deductible to, would be to that under that collision coverage. So automobile policies, they're very interesting because they widely range, a big range of how much you have to pay. And it all depends on this kind of stuff: the age that you are, okay, gender, okay. So actually, female drivers get in more accidents when they're younger, but they get in less severe accidents. Male drivers get in less accidents, but they get in more severe accidents. Teenage boys are a lot more. Yeah, so teenage boys get in a lot bigger accidents, but teenage girls, they say, get in more accidents, but of less severity. Okay, so the likelihood that a guy is going to cause more damage it's more highly likely. So it's actually cheaper to insure a teenage girl than it is a teenage boy. Marital status. Okay, if you're married, you're going to get a cheaper rate. The type of car, if you have a very safe car, you're going to get a cheaper rate. Car repairs. Okay, so if your car is less. Okay, mileage. If you depending on how many miles you drive, location of where you're at. If you're in downtown Phoenix, you're going to be paying more because there's a lot of car thefts down there. Okay. Law enforcement get a discount. Your driving record. Okay. That I'm not helping your fear of learning to drive. Well, I'm telling you the facts. I'm sorry. Health insurance, okay? So health insurance pays medical bills in case you or your family become sick or injured, okay? Most of your coverage is up until your actually it's extended now from Obamacare. You can be on your parents' policy up to the age of 26. Property insurance protects the material possessions in case they are damaged by fire, flood, or theft. Homeowners insurance and renters insurance, okay? So homeowners insurance covers your personal property and your home. Renters insurance, like if you're just renting somewhere, it will only cover your possessions. Okay, and that's really cheap. So you usually get a discount. So I would definitely recommend that. Life insurance. Anytime someone else depends on your income or helps pay your bills, you need life insurance. Okay. So since I have what they call dependents, right? So I have my wife that depends on my income, and I have 3 kids that depend on my income. The house looks like The Simpsons. That's funny. Then I need to have life insurance. So I have life insurance that will protect me if that income was to go away. Okay, future needs of insurance. Okay, so there's all different kinds: health insurance, property insurance, life insurance, disability insurance, and then other liability insurance. So, for example, if you were to have a trampoline at your house, it's probably good to have a higher liability policy on your homeowner's policy, or maybe even get what they call a personal umbrella policy that basically covers you from somebody trying to sue you if they were to get hurt or injured. Estate planning, okay? So estate planning is something that you need to think about once you get quite a bit older. But for example, my wife and I, we have a trust that kind of tells everything, like where our assets would go if we were to pass away. It also says if the kids are not of age, where they would go to stay. It also has, it minimizes taxes for my kids as well. So for example, um, if we didn't have anything like that, all the money would go into what's called probate. And then you have to pay like an attorney and stuff to get it out of probate, the money, and have it transferred over. And if the kids aren't of age yet, then it has to go to where so it can be a mess. So if you have a trust or a trust and will, and be able to divide assets appropriately, that will help out in that fact. Okay, and that is all I got for you today. So, what is due this week? I think we already went to the calendar. Let me go back. So we have 11 and 12. Sorry, 11 and 12 is what's due this week. So 11, 12, and then 13, 14, 15 is due next week. So just make sure you're watching the videos, getting those concepts down. If you do not get something right away, you can redo the quiz as many times as you want to get the desired outcome. So, okay, I'm gonna stop sharing here. Okay, do you guys have any other questions or anything like that that I can maybe go over with you? Make sure you have insurance before you get on the road. I got one of the accidents I was in. I was driving, I was just going straight, and I had a young kid that had his license for 1 day pull right in front of me, and I hit him on the side. So, yep. And luckily he had insurance, which is good because he had to pay for it. If not, I have no idea. He probably couldn't pay for it. So, all right, I'll stop the recording.